I think it's just another step towards de-dollarization. I don't think the dollar is going to be gone anytime soon. It will still be a major reserve currency, but it won't be the premier reserve currency.
Here at Liberty in Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Mario Ineko from the YouTube channel Mineko64. Mario, thank you so much for joining us today.
You're welcome, Elijah. Nice to be with you again.
It's great to have you. And really what we wanted to touch on today was the de-dollarization we're seeing around the world. You said in a recent video that Putin fired a financial nuclear weapon on the West. Can you expand on this?
Yes, he announced yesterday that Russia would be invoicing European countries in rubles for the natural gas that they buy from Russia. That, of course, will be probably for new contracts. I think he said that they're not reneging on the existing contracts because they want to have good commercial and financial relationships with their partners. And but I think it gives other countries, especially like China and even other countries that are not as powerful, the confidence that they, that they might not have had maybe 15, 20 years ago. So I think it's just another step towards de-dollarization. I don't think the dollar is going to be gone anytime soon. It will still be a major reserve currency, but it won't be the premier reserve currency. And I think it's just a symptom of that multipolar world of currencies. And I think what that will do as well, it will make gold come back as an important component of everything, because prior to now, and since 1971, the dollar was accepted. And I guess the petrodollar as well helped. And the fact that the U.S. has a strong military and was ready to use it. But right now, what we're seeing is that with what happened in Afghanistan back in August last year and what's happening now in Ukraine, it looks like the U.S. kind of is losing its power really to do anything. And they're talking a lot. They're putting a lot of sanctions on Russia, but they're really not acting militarily. So currencies will need to have some backing if people will want to trade. Nations amongst each other, they will have to back their currencies by something, because fiat currencies, as we know, have no real value. They're not really stable. I guess the dollar kind of ended, or kind of was the exception, I think, to the rule from 1971 until now. And if you look back 2,500 years, it's like a little footnote, I would say. And that's why I think gold will also be an important part. Some people think central bank digital currencies are going to be important, but I don't think they're the solution. They would be a Band-Aid. You sent me a report, a research report from Congress from July last year. And the individual who wrote that report said, would it be good for the U.S. to create, or the Fed create, a digital currency? Would that help the U.S. maintain its status as the major reserve currency, the dollar? And I don't think so, because the problem now is a question of confidence. And the dollar in the U.S. has had a good run as a fiat currency, and I think eventually, things will revert back to how they used to be.
No, you mentioned that report that I sent you is actually from a client of mine sent me that. So a shout out right there. Thank you so much. Now, the report was from the Congressional Research Service, and this was back in July. It was titled De-Dollarization Efforts in China and Russia. And I think the most significant thing about the report is that the government is actually acknowledging that there are de-dollarization efforts going on around the world. So it's like, that seems very dramatic to me that, our own government is acknowledging that this is an issue.
Yes, I think they've probably been aware of that for a long time. But I think if you go back to, I think it was John Connolly, he was the Secretary of the Treasury under Nixon. He was the guy that was riding in the limousine with JFK. He became eventually Secretary of the Treasury. And there's a story that he was in a conference in Rome, about monetary conference, and someone asked him about the dollar and the fact that it was weakening, and he said, well, the dollar is our currency, but it's your problem. But now it looks like the dollar is becoming a problem for the United States. And I think even though that report came out July last year, I think it's a little late to solve the problem. They said, the individual that wrote the report, that we could maybe think of legislative actions to make sure the dollar remains the premier reserve currency. Well, I would say they don't need that. They just need to go back to the Constitution, because that's why the dollar became such a strong currency, because it was backed by gold. It was in the gold standard. We also had, unfortunately, in 1873, it went off a bimetallic system, but everything's there. All the ingredients for a strong currency for the United States are in the Constitution. You don't need anything new. One thing I would say, one question was, what should the Fed do? Well, no, what should we do with the Fed? I would say the United States probably needs to end the Fed and abolish the Fed and go back to because it's only been since 1914 that really things have gone south, I would say, for the U.S. And but what that would entail, of course, going back to constitutional money, is that government would be handcuffed. There wouldn't be as much as big government, and American wouldn't be able to throw its weight around the world as an empire. It would revert back to actually what the founding fathers really advised that the U.S. should do. George Washington said, don't get involved in foreign entanglements. So maybe it's a good thing, but it's a long shot, I would say, unfortunately, but one should never lose hope.
I think that's so true. And people can, on their own account, go back to a gold standard in some sense. They can become their own central bank and accumulate physical metal and hold their wealth in physical gold and silver. And I think that's so key. We don't have to wait for the government to do something. We can take action ourselves.
Well, that's true. And I've been saying that for years. And I think it was Jim Sinclair, have to give him credit, who said that originally. You have to be your own central bank. And what that does as well, it keeps your money out of the banking system. If you're unhappy about the banking system, that it's not honest and it's too leveraged, that's the best thing to do, I would say. Gold, physical gold and silver. I would say not, you might want to trade paper gold and silver, but that's a different story.
Now, do you think one of the reasons that central banks have been accumulating so much gold, we've seen China and Russia accumulating gold, do you think this is because they're looking to trade in gold in the near future?
Well, I think it's because they've known for a while now that probably since 2008 and the great financial crisis, that the dollar was doomed and the euro for that matter. So they've been preparing for a world where multipolar world where currencies need to be backed by real money. I'm not sure they're going to be trading the gold, but they're going to be using it as a backing for their currency. And I think how it used to work in the past, prior to World War One, for example, China and Russia traded throughout the year, and if their trade was balanced, like, and they wouldn't need to like send each other gold by or around. But if China, for example, had a big surplus of rubles, they could technically go to the Russian central bank and say, "I want to give you these rubles. You give me the amount of gold that you fixed." It could be. It would be better to be fixed, of course. And it's ironic that we're talking about Russia and China doing this, and they're supposed to be authoritarian dictatorships, but they're actually. I think they know that a fiat currency is trouble. I mean, is the so-called Triffin Paradox that people, I think, is Robert Triffin, a Belgian economist, warned in the 60s and 70s that if you take the dollar off gold, or if you become a reserve currency, eventually that country will be running a lot of deficits, because every other country is going to want to sell goods cheaply so they can accumulate those dollars. But in a world where gold is the ultimate money, that's not necessary as long as you maintain a balance. And we might be in a world where every currency is accepted as long as they're backed by gold.
Besides from China and Russia, we are seeing efforts from other countries to de-dollarize. For example, Saudi Arabia now wants to have their Chinese oil sales denominated in yuan instead of dollars. What other, did you want to touch on this, and also other efforts by countries to move away from the dollar?
Yeah, Saudi Arabia, I think the other point they're looking at is the geopolitical structure of the world. Back in 73, 74, when Nixon negotiated with the Saudis, the deal was that the U.S. would help maintain the security of the Kingdom of Saudi Arabia. And Saudi Arabia, being the biggest oil producer at the time, said that they would only sell their oil in dollars, and that was for OPEC as well, because they were really in charge of OPEC. So that put the world on a petrodollar standard. But looking now, last year in August, what happened in Afghanistan, the mess that the United States left Afghanistan in. They were there for 20 years. They're supposed to have rebuilt the country. They're supposed to have brought democracy to the country and security. And it was all unraveled in the matter of days after they left. So Saudi Arabia must be thinking, wow, we can't really depend anymore for our security on the U.S. So I think that's a big part of it as well. And why not sell our oil in yuan? And then the Chinese can help us as well with our defense, maybe, or infrastructure, or investing. And I read or saw a headline yesterday or the day before that India bought 3 million barrels of oil from Russia, and they paid in rupees. So the Russians will take those rupees, and they might need to buy something from India. Who knows? So, and I think there was also last year, Iran, and I think it was Thailand, I think it was Thailand. I think Iran owed some money, dollars, to Thailand for tea they bought from Thailand or something like that. And as Iran was shut out from the SWIFT system, they paid them in gold. So, or they bartered. I think they bartered. They sold oil for tea. So there's all these kinds of transactions going on. And also, I would say, with what's going on in commodities, especially with LME nickel recently, people are kind of losing faith and confidence in the West's management of commodity prices, commodity exchanges, and we could see these commodities shift towards China. I think they've built some exchanges there. So, yeah, and I would add as well, we've seen a lot of countries, especially with China and Russia, built bilateral agreements to trade amongst themselves in their own currency. So, yeah, that's the de-dollarization. Doesn't mean, of course, to say, that Thailand, when it trades with the U.S., will need dollars and vice versa. And maybe the U.S. will need to think about acquiring other reserves other than, they don't really hold many reserves, but one day the U.S. will probably have to earn its way instead of just issuing debt.
No, when it comes to the value of the US dollar, we're actually seeing against the Brazilian currency, the dollar fall. What is the significance of this?
Yeah, it's really unusual because the Brazilian currency has been a one-way street down recently. And I looked at this a few weeks ago because I was looking at the shift from paper to hard assets. And I had a look at the year-to-date performance of major currencies. And I was surprised that the Brazilian real was actually up against the dollar, up against gold. And now it's continuing to do so. I think it's to do maybe with the geopolitical shift as well. I saw that Larry Fink, CEO of BlackRock, said that to expect more inflation and a shift in dependency, maybe, from China and Russia and those countries, and maybe shift more towards South America, and Brazil being a very rich, resource-rich country could benefit from that. And I think a lot of investors have gotten out of Russian assets into Brazil because that's like an emerging market. I know of someone who was lucky enough to get rid of a lot of Russian investments just before everything kicked off. And this person told me they put some of their money in Brazil. So does that mean the Brazilian people are going to be well off? There's still a lot of problems there, a lot of inflation and inequality, but it doesn't hurt to have a strong currency, I would say. And I guess the fact that maybe demand for dollars and other Western currencies are going to wane, the value of real things are going to probably be reassessed, and countries with rich in resources that are kind of friendly towards the West could do well. And so that's what I see there. Yeah.
No, we are seeing a lot of people move into hard assets from paper assets. And I mean, even here at Miles Franklin, that's what we're seeing. Obviously, we're seeing incredible demand for physical precious metals, and a lot of the products are delayed, and supply is very tight right now, pretty much as tight as it has been. Your take on this and the general move, if we could get an update from you on what you're seeing, the general move from paper assets to hard assets.
Well, I think, there's been such a huge inflation of paper assets in the last, 40 years, really, since Volcker killed off inflation. And we've had lower yields, lower interest rates. That's built up a credit boom. So I think the world debt is now approaching, $300-400 trillion. And there's always something on the other side of that debt. There's assets. So even if people move a small percentage just to protect themselves, it's going to make it very interesting to be in the commodity space, precious metal space. But one caveat I would add is that there will be a lot of volatility. So if you don't know what's going on, if you haven't done your research and you're just trying to chase paper profits, you could be hurt. But for those people like you and I who have been following this for years, and I think it's the unraveling, it's the rebalancing. So I think it's going to continue for the next few years. Difficult to say exactly how many years.
No, where do you see? I mean, it seems like we are seeing this unraveling of the bubbles we've seen in a lot of financial assets. We're also seeing quite a bit of inflation right now. And we were talking before the interview how the CEO of BlackRock is saying that, expect inflation for quite a while. And it seems like that's what we're hearing from a lot of people, that this inflation is turning from transitory to more permanent.
Yeah, I mean, I've always said that inflation has been already created. It's just that people looked at CPI as inflation. But what we're getting now is the consequence of all the credit and monetary inflation, which is rising prices. If you want to call it inflation, fine. But it's unless the Federal Reserve, the ECB, the Bank of Japan become a lot more aggressive with their tightening, yes, they're going to be chasing this for a long time. So Larry Fink is not wrong, I don't think. And, even people who have been calling for deflation, I think someone said that, I think Mick Shedlock or Mish, he'd been calling for deflation a lot. He's even thrown in the towel, apparently. He accepts that there is inflation. And we've had inflation, but for years, but it's flown into stocks and bonds and real estate, and now we're actually seeing flow to real goods and to like services and wages as well. And the mistake that people make, and I remember this because I was a teenager in the 70s and used to hear, we had inflation because of high oil prices, but the inflation in the 70s was baked in the cake in the 60s and early 70s with the Vietnam War, all the deficit spending, all the Great Society spending that was started by President Johnson. Oil was just a symptom of it, but they will always use it as a scapegoat so people don't look at the real culprit, which is really the government and the central bank that have created the inflation. So now we're going to hear that it's Putin's fault, it's the Ukraine war's fault, but it isn't. It's just a consequence of all the money printing, easy credit we've had for at least 20 years now.
Well, Mario, really, really appreciate your time today. Before we let you go, I guess, what are some of the key things that people should be looking out for when it comes to de-dollarization, coming full circle here? And how, again, can people prepare for this major shift that's going on right now?
Well, what de-dollarization will mean is that there will be less demand for dollars. So less demand for dollars means sovereign countries won't be buying as many treasuries because they won't have as many excess reserves. So that will mean higher rates, higher interest rates, higher mortgage rates, higher credit card rates, everything more expensive. And what can you do to prepare? Well, the best thing I think is to be aware that that's happening and adjust your spending habits, your lifestyle, and maybe protect yourself if you're able to have savings with physical gold and silver or even other hard assets through stocks. You can buy commodity stocks. I think those will do well in the future. There's some interesting ones that pay dividends. I'm not here to give financial advice, but that's what I would do. And tighten your belts. Things are going to be different. Money won't be as easy to borrow as it's been for the last few decades.
Before we let you go, where can our viewers find you online, Mario?
Yeah, Monaco64 on YouTube, and I'm also on Twitter. And yes, I'm on Hive, BitChute, Rumble, and DTube as well.
Perfect. Once again, thank you so much for your time and insights, and God bless.
Thank you, Elijah, and you're welcome.